Estée Lauder stock is getting crushed. The market says this Puig deal is a mistake. But what if everybody's wrong? What if this panic is your golden ticket? Hi, I'm Johnny and this is jbandd's Market Sniffs, where we're sniffing out the market for some golden nuggets. Earlier this week, Estee Lauder announced they're nearing a deal to combine with Puig. Investors didn't like this, as the stock price has tumbled 19% just this week. But here's what skeptics are missing. Roughly 55% of Puig's revenue comes from Europe and the Middle East. For over a decade, US markets dominated, and that era is ending. This deal isn't just about adding brands, it's a perfectly timed geographic pivot. And here's the kicker. A weaker US dollar mechanically boosts Estee Lauder's international sales. This chart shows 13 plus years of US stock outperformance. The ratio of emerging markets to US stocks is now at a historical extreme. When extremes happen, reversions follow, and this tide isn't just turning, it's about to surge. And Estee Lauder, with its new Puig-powered global footprint, is positioned right at the shoreline. Well, assuming this deal goes through. Now let's talk China. Chinese households are sitting on over 20 trillion in savings. That's not just potential, it's imminent spending power. Early signals are flashing green. Alipay and WeChat reported booming inbound tourism. L'Oreal said China performed better than expected, and Estee Lauder in Q4 2025, their organic sales growth in mainland China accelerated to 13%, making China the #1 contributor to the growth. While others fear China, Estee Lauder is executing here. China isn't a small piece of the puzzle, as Asia represents 1/3 of Estee Lauder's total revenue. When that engine reaccelerates, the entire company lifts. This isn't speculation, this is a direct exposure to the world's second largest economy, with execution already proving the thesis. And here's the mega trend Wall Street isn't pricing in. By 2048, 124 trillion in wealth will change hands globally. Baby boomers hold half of all US wealth today. Who inherits most of it? Women. 54 trillion flows to surviving spouses, and 95% of those are women. Another 47 trillion goes to younger generations, largely inherited by women. That's over 100 trillion flowing into women's hands. And women spend meaningfully on premium self-care. This isn't a niche trend, it's the largest wealth transfer in human history, and it directly benefits Estee Lauder. Women today are more educated, marrying later, having fewer children, and holding 29% of senior management roles globally. The labor force participation gap is shrinking, the income gap is down to 4%, more earning power, and more financial literacy equals more discretionary spending on high-end beauty. And by 2050, the number of women aged 50 to 70 will hit 2.1 billion globally, with the fastest growing in India and Africa. This cohort has peak earnings power, peak savings, and peak spending on premium goods. Estee Lauder isn't just selling to millennials, they're building for the next 30 years of demographic demand. And just when you think it can't get better, Gen Z enters the chat. Their spending on cosmetics and skincare is 1.3 to 2 times higher than the average consumer. They're not just buying beauty, they're investing in it. And here's a recession-proof secret. During economic crises, downturns, recessions, consumers skip the $3,000 handbag, but they still buy the $40 luxury lipstick. It's called the lipstick effect. High-end cosmetics don't just survive downturns, they thrive. Estee Lauder isn't cyclical, it's counter-cyclical. Management isn't waiting for luck. New CEO took a $1 billion one-time charge to clean the slate. They're cutting 6,000 roles to save up to $1 billion annually by 2027. They're shifting away from declining department stores, now under 30% of sales, and investing in what consumers actually like. E-commerce, TikTok Shop, Amazon, and it's working. China sales again, up 30%. Online sales are scaling. MAC is now in Sephora. Finally, let's look at sentiment. In March, fund managers were underweight consumer discretionary by the lowest allocation since December of 2022. Everyone has already sold. That means there's almost no one left to sell. When the macro rotation, US to international, micro execution, margin expansions, and demographic tailwinds, such as the wealth transfer, finally align, the short covering won't be gradual, it will be violent. It's a fundamentally de-risked asset at the perfect intersection of global shifts. The market hates the Puig deal, but they don't see what we see. Like, subscribe, and I'll see you in the next deep dive. And one last thing, nothing in this video is financial advice. This video is presented solely for informational purposes. It is not to be construed as a solicitation or an offer to buy or sell any securities or any related financial instruments, nor should any of this content be taken as investment advice. Any opinions expressed in this video are subject to change without notice. Okay? And jbandd LLC is not under any obligation to update or keep current the information contained herein. Speak to a financial advisor or financial professional before you make any financial decisions.